To enjoy your financial freedom in retirement, you will require a regular, consistent fixed income, if not increasing, and that can only be obtained from putting your accumulated goal amount for investment in investment opportunities that expose you to the least risks in terms of protection and security of that portfolio, in terms of interest rate risk, and in terms of reinvestment risks. The investment vehicle should have a lengthened maturity period for you to enjoy that freedom with minimum effort towards generation of that income. A myth under passive income is that passive income is believed to be devoid or does not require any effort, but the reality is that majority of the sources of passive income would require to some extent your efforts or somebody else's efforts in order to continue generating those streams of income. And for a retired person, you will need investment vehicles that require the least amount of efforts to continue generate those income. Retirement is not an event but a process. Retirement includes partial withdrawal of your active efforts in generation of incomes. And that could simply mean you retiring from a high paying job and acquiring a lower paying job that gives you satisfaction. You have used the high paying job to accumulate your goal amount, to accumulate the needed capital that upon attainment of your freedom number, where freedom number is that age that you have set, upon which on its attainment you will start pulling out yourself from active work to less or reducing the amount of hours that you are putting into your active activities to generate income. But in the event you don't choose to plan your retirement personally, there is a legal set time and age upon which you will be pulled out of your active work and you will still need to survive. So for a person who has planned for their retirement, that amount that you are actively now putting together, assembling to give you financial freedom, that is our goal amount. And the purpose to which to attach to this goal out of goal investing, purpose investing, the purpose is to use this amount that you have accumulated to generate incomes. And at such a point, the least you can expect is risks to that amount. And for that reason, then, government securities give you that needed minimum risk and a guaranteed fixed income in your retirement. At retirement point, the least risk exposure means that you are not rushing for high returns because high returns attract higher risks, and therefore at that point in time, your investment in a fixed coupon bond with a elongated maturity period and giving you your desired minimum returns will be a good investment vehicle. Such is what you are getting from the FXD1 2018-25. This is a bond that was originally issued by CBK in 2018 and it has a maturity period of 25 years. This bond has been reopened for your investment. And investing in this bond, you are investing into a maturity period of 18.3 years because the bond is supposed to mature in 2043 and the specific redemption date is on 25th May of 2043. In that process of planning for your retirement, the most important aspect is identifying an investment vehicle that will generate the total amount that you require in a whole year, and whichever way it is paid, you put it into another investment vehicle that allows you liquidity and access for drawdown purpose. Drawing down means that you'll be accessing periodic or regular withdrawals from that account for your own consumption to support your living expenses. In such a case, then, If you are getting from such a retirement portfolio, you have assigned it to a bond that gives you a elongated maturity period like this one, the coupons that you will receive, you pass them to a money market fund on which you are going to be making your drawdown or your monthly withdrawals for your monthly expenses. And the need to have that amount in a money market fund is to ensure that the remaining balance still continues working for you, still continues generating amounts. And a good example, let's say, as somebody who has planned an investment that should give them in retirement a minimum of 100,000 per month. That will translate to a person who requires 1.2 million in a year. And an investment platform of returning a minimum of 10%, this person would require to have assembled a goal amount, a retirement fund of a minimum of 12 million shillings, so that when this 12 million is subjected to the interest rate of 10%, they are able to get the 1.2 million. It is this 1.2 million that you are going to be transferred to a money market fund or a drawdown fund. This 1.2 million, if you are accessing your 100,000 on a monthly basis, any amounts that are remaining in that account be able to give you additional incomes through compounding. That is purely on your retirement planning. And such can easily be gotten from fixed coupon bonds that have long maturity periods. They may not be suitable very much for a young person who is still in the accumulation stages of their retirement fund, because they will have lost the options of flexing their investments into multiple or different platforms that help them in accumulation of those income. But they are suitable for a person who is now retiring, a person who is achieving or approaching their freedom number, and they would want to minimize their risk exposures. We shall be looking at the specific features and important dates of the FXD1 2018-25 after 3 seconds short breaks, so don't go away. In the meantime, give us a like to this video and engage in the comment section. And if you have seen value in the video, you can share it to another person. If you are new to the channel, don't forget to give us your subscription and hit the notification button so that next time when we upload such a value-packed video, YouTube will send you a notification. See you after 3 seconds short break. Welcome back and thank you for your like and the comments. If you are new to the channel, thank you for your subscription. The first thing we will look at is the tax advantage that you get from fixed coupon bonds over a maturity of more than 10 years. This bond was issued for a maturity of 25 years, exceeding the 10 years requirement for a tax reduction. Therefore, the bond gives you a withholding tax rate of 10%, which means you are saving on the usual withholding tax of 15%. The gross coupon of 13.4% was subjected to that 10% withholding tax, and we are getting a tax amount amounting to 1.34%, which leaves us with a net coupon of 12.06%. Comparing with the current rates in the money market funds and the other forms of investment, then you realize that this return is good return and would be among the top 5. The second thing that is important to look at is the market outlook. What are the prevailing market conditions at the time of the issue of this particular bond? And as per this schedule, the current inflation rate is still at 3.3%, and the market interest rate as posted by the Treasury bills as per this schedule is still at 10.5%, while the market yield in the bond market is in the range of 13.8 to 14.2%. And because the market interest rate and the inflation rate do not generally determine the price of a bond, the market yield is the one that performs or is used to determine the clean price of a bond, while the dirty price will be the clean price plus the accrued interest for this particular bond. And in such a case, then, comparing with the coupon rate of 13.4% and the yield of 13.8%, it remains that the competitive bidders, who are usually the fund managers, will be seeking to get a return that is above 13.5% for this particular bond. And for that reason, to compensate for the difference of the rate of return that the fund managers will be looking for and the coupon rate or the yield for this particular bond, there is a huge possibility that this bond will have a discount on its clean price. Our projection in terms of calculation, we are looking at a price of about 99.98, which when we add the 3.0923, which is the accrued interest of the bond, we are projecting a price of about 103.0723. The third item is on the coupon payment month for those who would want to use this bond for laddering purpose. To ladder is to build or layer bonds that pay in different bands that give you a monthly income for a period of time, upon which you reinvest the maturing investments to continue giving you a stream of income on a monthly basis. And this bond is paying its coupons in the month of June and December. And looking at the bonds that we have had for the last 12 months, this has been a rare bond, and therefore it would be a good pick for those who would want to ladder their bonds. Then the last item to look at for this particular issue will be the important date for this auction. And the first date is the selling period, which also refers to the bidding period. This is a period that is given upon which you are going to create your DAO CSD account. If you don't have one, get it approved, and the period is long enough to allow for all that process. But for those of us who have our CDS accounts already, you'll be required to place your bid from the 21st of February up to 5th of March. That is a long period of time. Then the auction date. The auction date is usually the same date which marks the end of the bidding period. And therefore, the auction date will be on the 5th of March. And to separate the two events, the ending of the bidding and the auction itself, you are supposed to make sure that you have placed your bid by 10 a.m. of the last date of the bidding period, that is the 5th of March. Then in the afternoon at 2, that is when the auction will be taking place and the release of the results. Usually the bond prospectus gives us the result date as 2 days after the auction date, and that is supposed to be on 7th of March. But out of digitization of the entire process, our results come on the same date of the auction. Therefore, you are expecting your results from this auction on 5th March to 7th March. Then at that time, that will mark the beginning of the payment period. The payment period will be from 5th to 10th of March, where 10th, as usual, will be on a Monday, which also becomes the value date. The value date is when those values of your investment will be reflected in your investment account in your DAO ZSD account. Then on the same day, the bond will be transferred to the secondary market for purposes of trading. Those are the special dates and features of this bond in the March auction. Thank you for watching, and see you in our next video.